everybody, Payments Professor here, and welcome to the Payments Podium. Today we're going to have a discussion about CBDCs, Central Bank Digital Currencies. What are they? What do they mean to the world, really, when it comes to what's happening in the world of electronic payments? I know a lot of you have been sending in questions, asking about it, and today I got Bonni Brodsky. She's with Lippis Advisors, and she's going to help educate us a little bit on the world of CBDCs. So Bonni, I want to welcome you to the Payments Podium, and could you just say hi to everybody?
Yeah, hi. Thanks so much for having me. I'm really looking forward to this discussion.
All right. Well, Bonni, on the Payments Podium, there's a question that I always got to ask everybody because the world of electronic payments and the path to getting into this world is usually unique and interesting. I'd love to hear how you ended up getting into electronic payments because it's rare. I've had one person who did say when I was a kid, I loved playing a banker and I always wanted to be able to be in electronic banking. I was like, wow. But most of us, like even myself, it wasn't on purpose. I kind of accidentally ended up in this field. So how
Right.
did you end up in the world of electronic payments?
Yeah, absolutely. So I guess I started my career at the Federal Reserve. So I did graduate school, knew I wanted to kind of be in public policy and economics, that intersection. So I was really lucky to start off at the Federal Reserve Bank of New York, both in New York and Chicago, where I was working on the trading desk of the New York Fed as a senior analyst trader, basically implementing monetary policy on behalf of the Federal Reserve System. So that was an amazing opportunity to learn about obviously central banking, monetary policy implementation. We followed what was going on in capital markets and global financial markets. And that's where I first got kind of exposed to payments, although, as you know, the Fed provides, payments infrastructure, FedWire, and now FedNow. But that was not something that I was directly involved with when I was there. Later, I moved to Berlin and was looking for work that was really at the intersection of central banking, monetary policy, digitalization, financial inclusion, and was very lucky to meet Leo, who you know, Leo Lippis, who's the CEO of Lippis Advisors, and he kind of pulled me into this world. So my understanding is that payments historically have been more kind of operationally focused, but now they're really at the cutting edge, as I said, of a lot of really interesting policy and business questions. So I feel really lucky to have landed now in this space, having started as a central banker.
Wow, what a path to be able to get here and going through the Fed to get here too. That's really interesting. And yes, I love that you mentioned Leo. Leo, Lippis Advisors, definitely friends of the Payments Professor and the Payments Podium. So always enjoy having you guys on because I tell people these are the global experts, not just centralized to certain countries. The global experts, especially when it comes to faster payments and what's happening out there. Now, the first question I got for you is really an easy one, and that's just what is a CBDC? Because I know there's a lot of confusion out there as to what is actually a CBDC. And when I try to tell people what it is, sometimes I create more confusion. So can we hear your definition of or explanation of basically what is a CBDC?
Yeah, absolutely, of course. So CBDC, obviously, central bank digital currency. So there's, I guess, a couple of ways that I think are useful to look at this. So it's a digital form of money that is a liability of the central bank. Now, a lot of people think, well, I don't understand, I already have money in my bank account. That's digital money. How is this different, right? So the digital money that's in our bank account is a liability of the commercial bank where we are, trusting that our money is safe, right? The public at present, except in the very few markets where CBDC is implemented already, do not have access to central bank money directly.
And
Now,
that's a good thing that they don't. They don't understand that. But
I mean,
it's actually a good thing that we limit and secure who can move that money.
yeah, however, the public does have access to physical cash, right, which is a
Right.
central bank liability. And so, there is of course that form of access, but in terms of digital central bank money, that's typically in most markets held only by commercial banks, licensed commercial banks, held in settlement accounts, and is used for interbank settlement in an RTGS system. So, and it's the idea of kind of expanding access to digital central bank money to the broader public has been around for a while. I think it's it's an idea that has been around for maybe a couple of decades. However, it got kind of renewed significance in this context of Bitcoin, cryptocurrencies, big tech, stablecoins, China, and that's why it's kind of become of increased relevance. But
Now,
this,
okay,
yeah.
one of the things I want to mention too is you mentioned the being a liability and control and access. And I know a lot of people listen to the Payments Podium ask why we do some of those things. And I'm pretty sure you would agree with this. It's really so that we can keep money's value, so that it isn't to make sure that it maintains value, especially around the globe or within different countries. That is the purpose of controlling it, limiting who has the availability to make changes to it, or how it's even dispersed. And those controls are for a purpose. It's not the overall conspiracy government control that people fear. It's really just to make sure that it stays safe and secure and maintains its value.
Yeah, absolutely. And I mean, that's, been the function of central banks from a payments perspective for, many decades. I mean, it's not just limited to one market. Almost every country in the world, for example, has an RTGS system, and has a framework for managing, the monetary supply, or, the amount of money that banks are holding. So, it's also for security, but it's also, as a tool to implement monetary policy, right, to affect the conditions such that interest rates trade where they should, to protect against inflation and promote economic growth.
Now, one of the things in CBDC is I tell people, it's really just the equivalent of your physical money. Mm-hmm. Now, the thing is a question comes up then, is it going to take away and completely replace physical money, or will I still have physical money in places where there's a CBDC? Because I know, especially in the U.S., that's a really big, I got to say, fear more so than
Yes.
concern. So do the two work side by side, or can you only have one?
Mm-hmm. Yeah, absolutely. So I would say in most of the major markets where CBDC exploration is taking place, it's always framed as an alternative to cash or an alternative to other digital payment methods. There's a very strong appreciation among the central banking community of cash, and its value in terms of access and availability, privacy, all of this. So, there are, however, markets such as Sweden, for example, where you have 4% of point of sale transactions are cash, and the rest are all digital, where you actually have lost cash as a potential backup payment option. And so, the central bank in a market like Sweden, or a highly cashless market, also has to think about, in a situation where cash is disappearing, what are some digital alternatives to cash that can provide some of the same features that physical cash provides today. But we're certainly a long way away from that in the U.S. and even in Europe.
And I love you said digital alternative, and that's what it really is. And you subtly actually even mentioned that a lot of people don't realize cash is very expensive to be able to handle and to move around, very cumbersome, takes a lot of time to be able to do it too. It's actually quite dirty, and it's also one of those things that it can be traced, maybe not as well as some of the digital options people don't realize, but it can also be easily lost or stolen. Much easier lost than stolen than, say, the digital type of assets.
Mm-hmm. Yeah, absolutely. And, there's also some very, people think about cash transactions as being, very popular among like criminals or money launderers and things like that. But there are also some very legitimate use cases for cash because of their privacy features. So for example, someone that maybe they just want some privacy around medical expenses that they have to pay, or someone in a domestic abuse situation that is trying to make transactions to get out of that situation. So it's not just cash isn't just enabling criminal activity. Obviously it has much greater utility outside of that. And like I said, there's a great appreciation for that from the central banking community. And there are certain markets, for example, like Nigeria, which has been one of the first markets where CBDC has been implemented, where one of the motivations behind that has been to clamp down on cash-based corruption. But that's been quite interesting because it's actually been quite successful. And you can imagine that people find other ways of sending bribes and, doing criminal activity, even in the absence of, less cash. There's very sophisticated ways of, kind of gaming the system. So, yeah, that's pretty much it.
But it does help protect a lot of people. Now, one of the things that I want to definitely talk about is, and you hit a little bit on it, is what's happening in the U.S. And the question comes up, is there a CBDC in the U.S., especially now that we have FedNow? Mm-hmm. And I get a lot of things on the internet coming in from people that, follow the Payments Professor saying, this is FedNow is a CBDC. How can you support this? And that's why I want to give some clarification on what a CBDC is and what it is not. And you're doing a great job of that. But can I ask you your opinion? Is FedNow a CBDC here in the U.S. or is it something totally different?
Yeah, so I would say absolutely not. And I'm living in Germany now, so I'm not exactly how this narrative developed. But I think it's quite misleading to characterize FedNow that way. So FedNow is a national instant payment system, which there's already been one in the U.S. since 2017 with the clearinghouse's RTP network. Instant payment systems are also, there's at least 60 of them all over the world, but they're for transferring money in commercial bank money. And they have the benefit of being instant and 24/7 and all of that. But it's other, if you think about making an ACH payment, there's really no difference of a FedNow payment other than the fact that it clears instantly and is available 24/7. So it really has absolutely nothing to do with a central bank digital currency. Yeah, there's maybe other issues with FedNow that you can talk about, but that's not one of them. Yeah.
Right, and that's the biggest point is I just want to, I keep iterating that point to the followers out there, and, thank you to all the followers out there, but FedNow is not a CBDC. Mm-hmm. So the question, though, does come up, is there a chance that we're going to see a CBDC anytime soon in the U.S.? Like, is that going to actually happen? What are your thoughts? What are your beliefs on that?
Yeah. So I guess kind of on this theme, it seems that the discussion around CBDC has become very politicized in the U.S. And the U.S. is not unique in that respect. For example, in Europe, where the digital euro discussion is much more advanced and development is much more advanced, you have a lot of these similar kind of fears, right, of, control, loss of privacy, this kind of thing. I would say, there's a very strong argument to be made, not just for the U.S., but for any advanced economy or market with a highly developed digital payment infrastructure. Why is this needed? And, in a market where you have cards, you have instant payments, you have bulk payments, you have wire transfers, you have mobile wallets and e-money, why do you need yet something else, right? In a sort of retail context, in a P2P context, in a point of sale context. And I think actually this question from the advanced economy perspective still has not been answered very well. And it seems like in markets like Europe that the discussion around a digital euro, for retail use is more motivated by kind of political considerations or, non-economic considerations, but mostly around sort of maintaining autonomy within European payments. So in Europe, there's always been this issue of the dominance of the card networks, these American companies that have come in and they're, so dominant and they control all of the data. And so there's a desire to shift away, try to, shift away from that, and particularly also in the context of big tech becoming really big in payments, not just, the Apples and Googles, but also some of the Chinese big tech. So, those types of motivations of, desire for greater autonomy, are not necessarily economically motivated. And you could imagine that in the US context, there's a lot of similar kind of, maybe questions on that. I mean, there's a whole question, much more macroeconomic, but sort of, if CBDCs take off globally, and you start to see cross-border CBDC settlement, what does that mean for, the role of the US dollar as a reserve currency, or the role of the US dollar in trade and all of that?
Can I stop you right there on that one? Because
Sure.
that is a big point when it comes to even FedNow becoming available that I've been trying to get across to a lot of people is understanding, because you already mentioned, I think, 60 countries having faster payment systems. Now, this is not CBDC, it's just faster payment systems. Big difference, everybody listening. And the US just now got FedNow. So people don't understand or believe me when I say the US is actually far behind
Yes.
when it comes to the development of the instant payment systems. And then you just mentioned going more cross-border, granted cross-border potentials with CBDCs. We don't have a CBDC. I don't think the US will have one anytime soon either. But other countries, like you're mentioning Europe, they're close to having one. In fact, I believe that they're looking at like maybe 2025 that potentially having the digital euro. And then isn't the UK also going to have their own digital pound?
Possibly. Yeah, I mean, I think just to bring it back to one of your earlier points, I think something that Americans, and I'm, again, an American living in Europe, but I think something that Americans don't appreciate is how behind the US is in terms of payments innovation. And part of that is, of course, the US just has very old systems that were developed. FedWire, I think, was developed in 1970, one of the first RTGS systems in the world. And other countries that have developed their digital payments infrastructure ecosystems much later, they don't have to deal with all these legacy issues and just having old systems, and they're able to kind of leapfrog. But with that, the implications of that, I think for the U.S., it's really important to understand that the U.S. is no longer a global leader in digital payments, and they're actually much lagging behind, as you mentioned. And so I think from the European perspective with the digital euro and even the UK, that is also another motivation, which is to, stay on the edge of payments innovation and maintain, the regional competitiveness of the European economy, the UK economy, post-Brexit especially. And, that's something also to keep in mind. But I think it's really important for the US to, and again, it may not be through central bank digital currency. There are other potential private sector alternatives that could fulfill many of the same functions, which maybe you might see a market like the US kind of go down that route. But there's a lot of work right now in the cross-border space to shift away from correspondent banking. A lot of this work is focused on how CBDCs could do that. You could imagine if you had a multilateral platform where countries can seamlessly exchange CBDCs, both central banks and commercial banks, 24/7, how that could really revolutionize cross-border payments and lead to a shift away from the US dollar as a preferred form of payment for trade and all of this. And I think that's what the US should really be kind of paying attention to and thinking about.
Well, when you mentioned the cross borders and CBDCs, because I definitely agree too, we want to keep the US dollar strong, and so that's why we need to move forward and look at, maybe not implement, but at least be looking at and open to some of these options. But when you mention cross borders, there are a lot of challenges that I don't think people realize that exist in cross border payments overall. And it's been said that CBDC can help address a lot of these challenges. Can you let us know what are some of the challenges that CBDC can actually fix, or what are the actual challenges in cross-border, and how can CBDC actually help fix some of those problems?
Yeah, sure. So I think, Americans that use the dollar and even Europeans that have the euro, maybe they don't appreciate how difficult it can be for people in other countries to, make remittance payments or, even in like, for example, in Africa, where there's a lot of sort of migrant workers working in other countries to send money back home is really costly and slow. There's not historically cross-border payments have been done through correspondent networks, which rely on these relationships between banks that kind of maintain accounts on behalf of their correspondents. And so, when you have a number of intermediaries involved in any process, it becomes more expensive and slower, and just a poorer user experience. So, one of the ways that CBDCs can help facilitate improvements in cross-border payments is, first of all, the instant aspect of it, which is not unique to CBDCs. Instant payments systems can be connected, but also, sorry, I lost my train of thought. But also by reducing the number of intermediaries, right? So again, you can imagine if central banks could instantly exchange, their own current, or make payments in their own currencies and receive payments in their own currencies, that the cost of trade could be dramatically reduced. So again, as Americans, and having the U.S. dollar so widely used and accepted, we don't necessarily appreciate some of the challenges of cross-border payments. But if you're a migrant worker, working in Singapore that wants to send money home back to the Philippines, or whatever, it can be extremely costly and difficult to do that. And there's been this very broad agenda that the G20 has taken on over the last couple of years with respect to improving cross-border payments, and CBDCs could be one aspect of that. I should mention though that when we talk about cross-border CBDCs, we may not be talking at all about CBDCs that even individuals or businesses could hold, but just maybe even facilitating on the wholesale side of things.
It's really more for the government type exchange to be able to take place, correct?
And commercial banks, yeah.
Yeah.
So.
Well, and also one really big point that I love to make in all of this too is we're not talking about a global currency. We're talking about the exchange of different countries being able to make their currencies. They just do it more electronic to be able to simplify and expedite the process too.
Yes. Although, and something that I would bring up as well is, for non-Western countries, I think the recent events with the, conflict in Ukraine and Russia, and sanctions and all of this, and it's become very clear to kind of non-Western aligned countries that, being cut off from SWIFT is an option, and it's a very scary option that they might face in the future if they, do something to upset the Western bloc of countries. And so therefore there's a very strong motivation to look for alternatives to correspondent banking and SWIFT, to mitigate against these kinds of geopolitics that can actually impact the cross-border payments and all of this. This is something that I was actually in Saudi Arabia in Riyadh last week, and discussing some of these issues with respect to cross-border payments with some of the banks. And this is a very important point, I think, or point of interest and motivation. And with the recent BRICS summit, I don't know if you followed that, the BRICS countries, the Brazil, Russia, India, China, South Africa, they, there's been rumors and talk of them, developing their own kind of regional payment systems for cross-border to kind of, mitigate against these geopolitical risks. So it's a really important aspect of the whole CBDC dialogue that I think should be appreciated in the U.S. in terms of what's going on in other parts of the world.
Well, I got to tell you, we really got deep there. I love that, getting into some of the background things that are happening, looking forward too. That's the other thing, is the future of what's happening with CBDCs and all that. One last thing I really want to address is the success of CBDCs where it has been launched. What's it actually look like in places that have launched CBDCs? Is it successful? Is it working for them? Is there anything you could share there? Or on the other end of the spectrum, if people launched it and been like, this is terrible, we should have never done it.
Yeah, sure. So, so far, there's only been a few actual implementations of CBDCs, mostly limited to emerging market countries. So, Jamaica, the Eastern Caribbean, the Bahamas, Nigeria. Um, in these markets, there has not been, widespread success and use of CBDCs. Um, Part of this, I think, is because, the business case is not necessarily there for retail use, as I was describing a lot of the issues. You can issue this central bank digital currency and you can put it out into the market, but you can't force people to use it, typically. And so therefore, if there's no incentive to use it, or if there's no incentive for the banks to develop interesting products around that, then it just simply won't be used. It's also very difficult at the consumer level to compete with some of the legacy acceptance networks for example, for the card networks that have been developed. It's very difficult to compete with that. And until you have kind of a mass acceptance network, it's going to be very difficult for people to use a CBDC. I think also there's been concerns, frankly, about privacy, particularly for example, Nigeria. And I think there's been a lot of lessons learned in that. I think, certainly in the European context, one of the major concerns around the digital euro is privacy. And Europeans, by the way, care a lot more about privacy, data privacy, than Americans on average. There's obviously exceptions, but that's a big concern. But I would say that, again, there's a lot of still kind of pilots going on, experiments going on, and this very small sample of live implementations that we've seen may not be indicative in the future. I think the markets to really watch are, for example, Brazil and India. One, because they have extremely successful instant payment systems with PIX and UPI. But also that both those central banks, and particularly India, the RBI is moving very fast with the e-rupee. So in those markets where you have very, very widely adopted instant payment systems, will there be a need or a use cases for CBDCs? I think that could be quite interesting. And then of course China has been one of the earliest countries that has looked into digital currencies as early as 2014. And they have a very advanced, still kind of limited scale pilot of the EUN, although, they've seen, the whole China CBDC discussion is very interesting. We don't necessarily need to go into that. There's a lot of issues there, but, China is very motivated to internationalize the renminbi, and, CBDC is another potential tool for doing that, and that's been part of their motivation, so.
Well, I'm going to say, I think we're going to have to leave China for another day.
Yeah.
Because this has just been a lot to digest. And it's great. I hope everybody out there listening has got a better grasp on what a CBDC is and what it does. I really think, too, some of the closing things that I heard from you is that it seems more like let's wait and see what's going to happen with it. It's still in its infancy. It's still developing. There are some obvious use cases, no doubt, especially in, like you said, the cross-border, but there's still also a lot to learn when it comes to what's going to be happening in the world of CBDC. So, Bonni, I do want to thank you for being on here and educating everybody. Is there any last comments or anything that people need to know to be able to get a hold of you?
Oh yeah, sure. Well, feel free to find me on LinkedIn and reach out. Thanks so much for having me. I guess I would definitely agree with your assessment that kind of wait and see. Again, we didn't get into this too much, but there are other kind of private sector alternatives to CBDC that are definitely to watch. Stable coins being one of them, particularly bank issued stable coins, deposit tokens. That's a whole other topic. So I wouldn't necessarily say that CBDC is the only solution to, some of the problems that are seen as, needing to be addressed. But it is definitely worth continuing to watch what the rest of the world is doing and trying to really learn and assess the landscape, because really the implications of this new form of money coming live could be very big, both positively and negatively. So, yeah.
So stay tuned, everybody. There's a lot more to learn. And if there is a speaker or a topic you would like to learn more about on the Payments Podium, please email me, kevin@paymentsprofessor.com. As always, I'll do my best to find the payments experts out there to be able to share their knowledge, their experience, and their expertise on whatever topics you're interested in. Again, email me, kevin@paymentsprofessor.com. But for now, I gotta say, class dismissed.